Welcome to the System Simplified podcast, where we feature top leaders who share stories on how to successfully systemize a business. Now, let's get started with the show.
Hello, Adi Klevit here, the host of the System Simplified podcast, where I feature top founders, entrepreneurs, and thought leaders about systematizing a business. And today's episode is being brought to you by Business Success Consulting Group, where we create, document, optimize, and implement processes and procedures so businesses can grow and thrive. And today's guest is Rocky Lalvani. Hi, Rocky.
Hi, thank you so much for having me on.
You are very welcome. How are you doing?
Doing well.
Good. So we need to give a big shout out first to Rich Walker, who introduced us. And Rich and I recorded an episode, and I'm going to include it in the show notes. And we had a great conversation about processes and about the growth of his company. Rich is the CEO of Quick, and he has a great story to tell. So definitely I will encourage our listeners to listen to that episode as well. So Rocky, now I'm going to introduce you. So you are a seasoned expert in profitability, and that is what we're going to talk about today, is how to become more profitable. You know, I'd love to build a process for business owners that are listening to us on how to become more profitable. So you are an expert in profitability and cash flow management. You help establish business scale efficiently while maintaining financial health. And that's another topic I want to discuss, you know, the difference between growth and scalability, because it does have to do with profit and being financially healthy. You are a certified profit first professional. You specialize in guiding organizations to engineer profitability, optimize cash flow, and implement profit-focused strategies across all departments. Your mission is to help business leaders growth into sustainable success and achieve maximum financial rewards. That is a great goal and a great purpose.
It is. You know what's funny, though?
Tell me.
Most business owners don't focus on it.
Yeah, what do they focus on then?
I think they focus on doing the parts they love. You know, it might be the creation of a product. It might be the delivery of a product or service, whatever it is that they're doing. But most of them don't like to dig into the financials, don't want to look at them, and have no idea what's going on, which is kind of a shame because they went into business to make money and enjoy life. And if you're not paying attention to your money, I don't know how you're going to make it.
That is very true. Very true. What is the difference between scaling a business and growing a business?
Well, so for us, the way we look at the two, you can grow a business. In other words, let's say I'm a plumber, right? And I double my sales next year by doing more work. Maybe I add another truck. That's growing a business, right? I think scaling a business is much more where you bring automation and systems in that don't require you to specifically work more. And I think that's kind of the difference. Is scaling comes when things are done without as much effort versus just doing the same thing but more of it. Does that make sense?
It does. Would you say that scaling also has to do with maintaining profitability or gaining more profitability or as you grow? Because what I mean is, you can grow a business by adding employees, right? The business will grow and grow and grow.
Mm-hmm.
You can go, okay, I'm going to add more employees. I'm going to have and add more trucks. I'm going to add more budget for my advertising. Great, your profit hasn't increased. But if you actually scale the business, then if you do it smartly, like you said, you implement the systems, your efficiency is up, your consistency, you are automating whatever you can automate, or at least you're replicating your success, but more efficiently, then you are able to increase the amount of business that you are doing without necessarily increasing the overhead where you're going to have more profit.
That is correct. And one of the things that people don't realize, most business owners just go, well, if I don't have money, I'll just sell more. I'll just grow my revenue. Growth takes cash. Scaling can also take cash. And if you don't understand what the cash needs are for the growth of your specific business, you can actually grow yourself into bankruptcy. And it happens all the time. It's one of the biggest reasons a fast growing company gets ahead of its cash and it's literally burning cash faster than it's coming in. And unfortunately, the whole thing blows up. And so you have to be very specific. You've got to build a model that actually allows you to scale and brings the cash in first. And I'm not talking about borrowing from the bank or investors. I mean, that's all fine, but the business itself should fund the growth. A lot of businesses get it backwards, and so they do have to borrow or they do have to look for investors, and that causes more and more problems, and that's where the cash flow crunch occurs. So some
so that would be,
businesses,
Rocky, like for instance, I just want to get a specific example.
yeah.
So I would assume that what you're talking about would be an example of hiring a high-level executive because you decided now you need a COO that will drive the expansion. You are paying that person $200,000 a year, and you do not have the cash to sustain that, and now you have to borrow, or you are burning through all your cash, and now you cannot advertise and you can't really grow the business. Would that be a good example?
That's one example. Another example is, let's just say we're a brick and mortar store and I grow by building another brick and mortar store. Well, it costs money to build the store. It costs money to stock the store. And so depending on how you've designed that, then you're behind the eight ball on cash. Even in e-com business, even just if you've got a regular e-com business and your sales double, and now you have to order inventory in faster and pay for it ahead, you can get behind the cash on that as well, depending on the particular business. So understanding what it is and understanding that growth may take cash if you don't design it correctly.
That is very true. So what are some of the strategies that you recommend for business owners to maintain a free cash flow? And how can they design growth where they're actually funding the growth as they go?
So a lot of that comes down to picking the right business and the right type of business model and the right business environment. So as you're looking at your business, you have to ask yourself, how do we build a business where the cash comes in first? And then we have our expenses. And you can have businesses in a very similar industry that work very different ways. Some industries, it's harder to do this. And so then you have to ask yourself, is it worth going into that business? And do I have the cash to be able to do that? We use a model with 16 different levers, and you can literally lever out the entire business with these 16 numbers that tell you from lead flow to cash leaving the business, how the entire business will operate. And once you know the levers, you can see where the bottlenecks are for cash or for growth or for whatever it is. And you can focus on fixing that lever, changing the way you look at it. So one of those might be, instead of selling something to somebody and invoicing them and hoping they pay you in 30 days, we might say, hey, you pay when you order. Maybe you even have to pay a deposit beforehand. And that shifts the cash flow from 30, 60, 90 days out to ahead of time. Now you have the cash to do the work. But be careful, because a lot of business owners, when they get cash, they forget they have to deliver and they spend it on something else. So yeah, you have to time all these things. And it is a system and a process.
Well,
And
that's why you also have different bank accounts for the profit first methodologies. Like you can put that money should go into a bank account to account, or at least the portion that you will need in order to deliver. So you're not spending it, because that is part of the whole concept.
It is profit first. What it really does is it gives each dollar a job, and you send it to do that job, but you have to have self-control, because if you start cheating yourself, you're going to get yourself in trouble. And so profit first starts with some basics. All the money comes into one account, and that's your income account. And this way you always know how much money came in. It's not mixed in with other money that you have. And then on a regular basis, we take money out of our income account and we give it a purpose and we send it to do its purpose. So, A, you said you're going to be profitable when you ran this business, right? So why wouldn't you take profit first? So you put money in your profit account. And most business owners pay themselves last, which is not fair. You're the one who took the risk. You're the one who's working the killer hours. Pay yourself. So we put money in the pay account. The IRS wants its cut, right? All the states want their cut. So we put money in the tax account. And then we put money into the operating account. And this is where we actually know, hey, this is how much I need to run my business on. So just because you sold something for $10,000 doesn't mean you have $10,000 to spend. You got to remember all those other things that are in there. Sometimes we add additional accounts. So for example, if you're getting prepaid, then we're going to have an account to hold that money until you actually use it. Or if you're an e-com business, as you're selling things, we're putting money aside so that the next time you have to place a large order, the cash is there to place the order. So all of this stuff is customized, highly specific to each specific business and how it works. And I think that's the problem. A lot of these systems are general, and if you don't know how to make it work for you, they just don't work. And it doesn't matter what system we're talking about.
Absolutely. Absolutely. What are other things that you have seen that actually drive profitability in a business?
So one is modeling it correctly. So one of the first problems we see is incorrect pricing. Business owners are leaving money on the table. So if you've got a business that, let's say it makes a 10% profit margin, the simplest, fastest way to double your profit is to increase prices 10%. Now, some people are going to say to me, I'm in a competitive market. I can't increase prices 10%. Maybe you can. So there's a couple things to think of there. Are you appropriately charging for all your services? And making sure that, sometimes we're giving stuff away for free that we should be charging for. It might be design work. It might be something else, might be add-ons. The other thing is you actually have to look through all your offerings. And as you do that, what I have found many times, it's the 80-20 rule. 20, 30, 40% of what you do is highly profitable. There's probably a portion of what you do that is actually losing money because you didn't appropriately price it or realize how much work was involved, or the customer's a pain, or there's a million reasons. So we try and we get rid of those non-profitable activities or clients. And this way you're not working more, you're working less, but making more profit. And at the end of the day, that's what it's all about. This whole grind it out and more is crazy. You went into business to enjoy it. Like, enjoy it. Stop killing yourself.
That is very true, but I think it is a hard mindset for some entrepreneurs to go from, let's say, having a company that makes $15 million to a company that now makes only $8 million, but they're definitely more profitable. But it seems like it's counterintuitive because you're making less money, but you're not. You're really more profitable.
Well, so let's talk about that. Would you rather have a company that had 10 million in sales and you as the owner walked home with 2 million, or a company with 50 million in sales and you as the owner walk away with $500,000? Who wants 5 times the stress, 5 times the work, and a quarter of the money? And people don't realize this is where the growth and the systems get out of hand as growth occurs, and money is leaking everywhere, and they don't even know where to look.
Absolutely. And what I say also is you trim it, you streamline it, you get your lean operations where you actually profitable, and then you can grow it again, but grow it right, because now you are going to monitor it against the profit. And if your profit decreases, that means you haven't done it correctly.
That is correct. And we see that a lot of times. They will grow their top line, but their profit numbers keep going down because, oh, we got to spend for growth. We got to spend for growth. And it's like, well, okay, but when are you actually going to make more money? And if you don't have a path to that and you haven't planned it out, it's difficult to achieve it. And that's what we see all the time. Things get beyond the owner, so to speak. They get too big, too unmanageable, and they don't have the proper solid systems and processes in place to begin with. And so that's the other thing you might see in a business is the inefficiencies, right? You start to grow, a whole bunch of inefficiencies come in. And here's the other dirty little secret. You know, most employees are not taught to create profit. They're taught to spend money. And so with that mindset, if all your people are spending money and no one's looking at profit and their goals and their metrics aren't tied to bottom line cash and profit, they may all hit their goals, but you as the business owner may not because you didn't tie them to your goals.
So 2 follow-up questions on that.
Yeah.
So what are other areas that you address in a business in order to increase profit? And then I want to come back to the question of how do we tie in the performance of the employees to profit, which I really think it's an important question to answer. So first of all, what other methods? So we talked about, you know, making sure that you are measuring your profitability, that you are allocated the money correctly. What other methods or hacks or tips can you give us in order to increase profitability?
So when we want to increase profitability, we have the 16 levers that we use for every business. And it basically flows from the beginning. How many leads do you have? How well do you convert your leads? How many customers do you have? How well do you maintain your customers, lose customers? How often do your customers buy? What's the average price? All of that is the driving revenue bucket. So this is how we drive our revenue. Then we look at the second part, which is driving profitability. So now I know my revenue number. How much did it cost me to deliver the product? Am I doing that efficiently? Am I in line with where I should be? And then the second half of that is, what is the overhead of the company that has nothing to do with the actual delivery of my product? What is my overhead? What am I spending on marketing? Am I getting a return on my marketing? Most people say, oh, we spend a ton of money on marketing and it works. And I'll ask them, but what part of your marketing is working? They go, we have no idea, right? So they're wasting a lot of money because they don't tie it back to the results. So once we do that, we now have your profit margin. So that tells us our profit. The next thing is driving cash flow. So when we drive cash flow, the biggest thing we're looking at is accounts payable, accounts receivable. What are your terms and contracts? When and how does money come in? How much inventory are you holding on to if you've got an inventory-based business? You know, people say, oh, you know, I'm so profitable, but I have no cash. I'm like, yeah, it's sitting on the shelf behind you in inventory. You don't realize that. How much money is the business owner taking out? Are they starving the business? How much is going to loan payments and principal payments and repaying debt? Maybe repaying investors. All of that affects cash flow. All of that shows up on the balance sheet. These balance sheets were created by accountants, and accountants aren't creating them to help the business owner. Nobody looks at balance sheets the way we do. We actually look at them in a very different way, and we track the changes from month to month to see where is the cash coming and going, so we understand how cash is flowing in the business so that we can better direct it. And again, every business is different, but they're all the same. In other words, you have a car. I have a car. It's the same. It's got four wheels, right? It's
Okay,
got a
I am
you,
totally with you on that because we do the same with processes.
yeah.
And sometimes I hear, well, you need to know my business. Well, I need to know process and process improvement. Of course, I
Mhm.
need to have familiarity, just like you do. You said this is not one size fit all and it has to be tailored to the business, but it is a financial system that has to be put in place, and that's what's important.
Mhm.
So tell me about how can you mentioned that the mistake that is being made is that the employees are not working for the profit. So they can be assigned statistics or metrics and they can meet their metrics. Oh, we did great, but then the business owner does not have profit. So how do you align everything that profit does matter and it is what's being measured?
So first off, I think you have to have a little bit of transparency. That doesn't mean you need to share all the numbers. And here's the truth. Just like business owners don't understand financials, your employees don't understand money either. So, there's this dichotomy. If they don't understand money, how are they going to make the right choices? So we have to figure out what are the right metrics. And when you pick a metric, what is the downside of that metric? In other words, how can it create bad behavior? So if we look at sales, instead of paying people on top line revenue and paying them out when the order is received, we want to pay our salespeople on gross profit, right? How much extra margin did you create for the company above and beyond what it just cost to deliver that item? You start paying them on gross profit, they'll start to see, hey, wait a minute, this product has much better gross profit margin than this one. I'm going to go start selling this because this is where I can make a lot of money. And so that's like one simple thing to do for the sales rep. And then the second part of that is we don't pay the sales rep until we're paid. This way they make sure they're not wasting their time on a client who will never pay the bill, right? Because that happens. So again, we bring the sales rep into alignment. The reality is every person in your business should almost be in sales for your business. From the person who answers the telephone, if you've got service techs, they can go out and spot opportunities to help sell. So you got to train your people how to help your clients and how to bring in more sales. If there's other positions in the company, even like your bookkeeping and accounting team, yes, we have to have the right numbers. So that would be an important metric, but also saying to them, hey, if you've got ideas on how to improve these numbers, how about sharing them? People aren't listening to their finance team. It could be the same thing for the production team. If you teach your production team about waste, or about setup or all these things again specific to the business and say, hey, if you can help us be more profitable, I'll give you a bonus. And you should call people out if they can fix a process in your company that knocks $100,000 of time off. Why don't you hand them a $10,000 check? I mean, seriously, you're going to make $100,000 in perpetuity. Handing them a $10,000 check, they're going to be looking for more things to help you grow profitability. But it's a culture and it's an attitude, and everyone should be aware of their impact. And I don't think employees think that. You ask an employee who pays your paycheck, the business does. No. You know who pays your paycheck? The customer. We don't have good customers with big margin who we like to work with. You don't get paid.
That is actually right there. It's a great mind shift because it is very true. Each and every team member, that's what I tell my team, contributes to the success of the business because no customer equal no pay. So that is spot on, Rocky. Rocky, what is your take on why processes are important for a business? We are all about creating processes and procedures and systems. Why are they so important for a business, and how do you see, from your experience, that they can contribute to a profit?
So when I look at a P&L, I can see the numbers, but what I don't see is the systems and processes behind it. And a lot of times it's bad systems and processes that are causing us to lose money on the P&L. So we don't have good workflow. We're always running around to deal with emergencies. We're rebuilding systems, rebuilding things every time we do it. None of that is good at all. I believe that when you've got, so let's look at McDonald's, right? McDonald's, no matter where you go, you walk in, you know what to expect. They deliver it. They take people off the street and train them in no time to deliver a systematic way of what they sell. And when you walk into McDonald's and you say, "Can I have a pizza?" They go, "Sorry, we don't do that." Not like, "Oh, let me figure out how to make a pizza for you," right? That's not going to happen. Every business should be like that. In every part of your business, the more you can systematize, the faster and easier everything becomes. The easier it is to swap employees or somebody's out, somebody else can easily step in. So when you've got good systems, processes, and all of this stuff in place, the business just flows easier. You're not getting 50 calls a day to put out fires. Everyone knows what they're supposed to do, how they're supposed to do it in a way that fits in with the rest of the organization. And I think that's a big, big part of it. And here's the thing with AI today, and with the tools we have to make videos, it has become easier than ever to systematize a business and to get help and to do it faster than ever. And the problem is most business owners are too busy, which is the problem because they didn't do the systems to begin with.
You're absolutely right. I mean, when I ask, we this is like what we do is a done it for you service. We go into businesses and we document their processes and procedures. We optimize it and we give them a playbook. When I ask them, why can't you do it yourselves? Two answers always come up. One, they don't have the know-how. Two, no time. But it's both of them. So they feel like it's this overwhelming task, but they also don't find the time because they can't stop the production. Fine, but it's all as it's like when you have no time, that's a symptom of I don't want to deal with it because I have time to deal with other things that I feel like are more important. But I couldn't have said it better. You're absolutely right. When you have systems, you have consistency, predictability, you replicate your success, you have efficiency, and all of that leads you to the freedom from the business, not being tied into the business, where you can strategically create on the business and drive more profit.
And that's what it's all about. And it makes it easier to hire people, to replace people, and that's a big part of it too, making sure you have the right people in the right seat with the desire to do the job. Too often we go, "Oh, they know how to do that. We'll just give that to them." And they're like, "Yeah, I know how to do this, but I hate it. So what do you think the chances of me doing it are?" Slim to none.
That's right.
And that is all part of the processes and systems, is to be able to build all of that out and make sure that everything is flowing together. The problem is you can't, it's very hard to put a dollar to that, right? I mean, like, until you do it, you can't see how much money was being wasted in the company.
That's right. So let's talk about that. That is actually a point where I'm being asked by business owners, entrepreneurs, okay, well, how do I know? I know that systems are going to increase my profitability. By how much? Well, I cannot tell you by how much. It really depends from business to business, and it depends how well you implement it. It's not just the documentation. It's obviously everybody has to follow, but that calculation of that lost opportunity or the lost income, the income you haven't made because of inefficiencies or because of right now current problems, how do you figure it out?
I don't know that there's an easy way. I think you can start to do it at smaller levels. I don't know how the question is it worth the effort to
I
figure
don't
out
think
the
so,
actual number,
because
right?
I think you have the before and after. You
Yes.
either systematize, you put the systems in before that your profit was such and such. You might have grown so much, but your profit remained the same. It's still good if you had good profit, or you increase the profit. I mean, that is very simple. It's like an organism, it's really looking at as if though you're looking at a body and you're going to a holistic doctor, or you are going to a doctor that will chop off one of your organs. So let's say, for instance, you have a problem with your, I don't know, some internal organ. You go to the doctor and they go, okay, the doctor just concentrates in that. Okay, we are going to do whatever we're going to cut. Okay, and that's it. But then you still have all the problems going on, because we know that all the organs work together, the endocrine system, everything works together. If you go to a holistic doctor and say, okay, well, why don't you take this supplement or these herbs or whatnot? Well, doctor, is it going to directly affect that particular organ? Might not, but it might get everything working together, and you feel better, you feel good, you're healthy, the problem solved. And I think that is a good analogy of looking at it, because it's never one set of circumstances, it's all of them together.
And that is very true. You have to look at everything holistically. When I talked about those 16 levers, all those levers are actually tied together. So when we play with one lever, we see what it does down the line. Mm-hmm. And what we have found is when you start playing with levers in a specific business, you figure out which ones have the greatest return. Because let's face it, we can do 100 things every day. But what if I could tell you these two things are going to drive the biggest impact? When you have that clarity, then you focus on those two things, and now we have the best impact. Then we'll go to the next two. Then we'll go to the next two. But at least it helps you know where to focus, what to work on, and what to do over the next 2 weeks to 4 weeks, and what you need to focus on. Otherwise, we're running around putting out fires all day, and we're wondering why we don't get anywhere or why nothing gets done. And that comes back to culture. It comes back to the values of the business and putting the right people in. And there's two parts to it, right? You build good systems, and then you put people in to run the systems. And if the people don't want to run the system, then they're not good people. They might be very nice, but they're not good for your organization. And so you've got to find that right balance and say, this is the way we do things. If you can improve it and you can make it better, we'll bonus you for doing that. So yes, make it better. We'll reward you, but you got to follow the system.
Yes, you do. Well, Rocky, that has been a great conversation here. Definitely a lot of information, a lot of data. So if our listeners want to hear more, learn more about you, talk to you, understand those levers better, understand how you work, seek your help, whatever, contact you, how can they do that?
So everything is on our website, profitcomesfirst.com. We have 2 podcasts. One is Profit Answer Man, where we're specifically focused on cash flow and profit. How do we increase it? And then the other one is Richer Soul, where we're on the softer side. How do we motivate the people? How do we motivate ourselves? How do we live our ultimate life? And so the two balance each other out. And it depends on where people are and what they want at that moment.
Great. So we'll have that information in the show notes. And I encourage our listeners to get in touch with you and learn more. So thank you again, Rocky, for being a guest on this podcast.
Thank you so much for having me today.
Thanks for listening to the System Simplified podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.